Stocks trade soft but ranged as a rise in the US dollar and bond yields keep the street on the edge. Autos as well as metals are the big drags, even as industrials and consumer durables manage some gains.
Vedanta Chairman Anil Agarwal tells CNBC-TV18 that the group's parent is on course to meet its debt obligations in 2024 and is looking to become debt-free following the sale of the iron and steel business after the proposed six-way split of Vedanta.
M&M notches up strong sales of SUVs, but tractor sales dip. Even Maruti sales come in weaker than expectations. But two-wheeler maker Hero MotoCorp, TVS Motors and Bajaj Auto put up a good show, though Eicher Motors Royal Enfield sees a loss in the market share.
ONGC sulks after crude prices fall. MGL gains after it cuts gas prices, and analysts welcome the margin visibility, while Federal Bank gets a leg up on reporting strong advances and deposits growth in the quarter.
India Inc.'s credit quality is fine, but not as great as last year. Rating agencies CRISIL and ICRA say for the half year ended September 30th, the number of upgrades were twice the number of downgrades. But a year ago, upgrades were 5 times the number of downgrades for CRISIL and 3 times for ICRA. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, as we can see right now, there is weakness in the market, and global cues have also not been supportive. Yeah. In fact, the money market is something that is really weighing on our markets as well. So, let's take a quick look at the market. 0.5% down on Nifty 50, 19,500 levels at which Nifty 50 is getting comfortable at lunch hour today. Now, when we talk about Sensex, 270 points are cut at the moment. Bank Nifty is also a drag, in line with the key indices, closer to 0.5% cut. But a spot of green is in the mid-cap universe, but it is really trading very cautiously with only 0.15% gain. Advanced decline ratio are neck and neck, with only a slight bit tilted towards the advances, and that can really flip any time. On my screens right now, handful of counters on Nifty 50 really gaining. Titan, Asian Paints are some of those counters in the consumer discretionary which are doing well today. And on the downside, a whole host of bigwigs and the heavyweights on Nifty 50 are seeing a kind of skittish day today when we talk about Reliance, HDFC Bank, ONGC, Hindalco and the Auto Pack looking weak today. Pavitra.
Oh, absolutely. Like you pointed out, there is overall weakness, but the broader market continues to outperform. So if you see the mid-cap index, the small-cap index, there's been quite a recovery from the lows. Both of these trading, in the green right now. The mid-cap index has seen a 200-point recovery from the lows as well, which is why, as Nisha was pointing out, the advanced decline looks quite balanced for now. Let's talk about some of the stocks which are, doing well. The IT pack is one space which has seen quite a recovery. It was one of the top losers during the early hours of trade, and now that's come off quite well. So HCL Tech is one of the bigger gainers on the Nifty right now. You have names like Tech Mahindra, which are also doing quite well. The entire pack has moved up quite significantly. You have that entire crude trade which is playing out because oil prices did decline around 3 to 4% overnight. So you have ONGC, which is losing in trade, but of course then Asian Paints, Berger, which are gaining in trade. The entire gas price rise is also, really helping names like MGL, IGL. So those stocks will be up for you as well. And we have a new listing, by the way, which was very solid, listed at 20% premium. That's the JSW Infra. So that one also doing quite well. On the downside, largely the auto names, and then you have a lot of the metal names as well. But let's kickstart the show now by talking about the auto pack, because the sales numbers have been coming in. This is for the month of September. Surbhi is here for a full roundup. Surbhi.
Thanks so much for that. So it was a mixed bag by the auto space this time around. Let's start with Maruti. The numbers were below estimates. Sales came in at 1.8 lakh units. Nomura estimated close to 1.87 lakh units. Overall, the sales were up nearly 3% on a year-on-year basis. M&M, it was a mixed bag. Very strong SUV sales, but the tractor segments seen some weakness. The total sales were up 17% on a year-on-year basis. Eicher Motors in line with estimates, but year-on-year the numbers were down 4%. and also the registrations were down compared to the industry. Royal Enfield sales were down 4%, as I said, and CV sales were up 8.5%. Hero Motor, the sales were higher than the Nomura estimates. Total sales were up 3.2%. Came in at 5.3 lakh units. Nomura estimated 5.25 lakh units. TVS Motor, again, sales were higher than Nomura estimates. The sales were up 6% on a year-on-year basis. Tata Motors, the domestic sales were up 2%. CV sales were up 12%. Bajaj Auto, the numbers were pretty much in line with estimates. Sales came in at 3.9 lakh units. Nomura estimated 3.85 lakh units. But overall, the sales were down 1% on a year-on-year basis.
All right. Thanks so much for getting us all those details in the beginning of the month on auto sales figures for the last month. Let's focus on the debut on the stock exchanges. And it's coming in from a large conglomerate after over a decade. So from the JSW Group, JSW Infrastructure made a strong debut on the exchanges today, listing at a 20% premium to its issue price. And also remember, this was the first IPO from the JSW Group in 13 years that we have seen. Vivek, my colleague, is here to tell us all about this impressive listing. Vivek, tell us, of course, JSW names, some of these big names really ring well with the investors as well.
Well, absolutely right. Very large capex plans have been outlined by the entire JSW Group, and like you mentioned, it's been over a decade that investors have been waiting for a listing from this prestigious group. And today, once the stock was listed, it's seen a significant pop-up, and in fact managed to go ahead and close the valuation gap versus its larger listed peers as well. Let's have a look at the company itself and what does the company do. Remember, it's the second largest port operator in India, develops and operates ports as well as port terminals as per the port concessions that the company has gone ahead and signed with the government of India. Now, the promoter shareholding, prior to the IPO was over 90%, now drops down to 80%. So there will be a slight overhang of the promoters looking to pare further stake in order to meet the minimum public shareholder norms of 75%. What does the company own? The company has 9 port concessions, both in eastern as well as the western coast of India, and also has 2 port terminals that it operates in United Arab Emirates. Now, talking about the financials of the company, it's been a steady CAGR growing in terms of both the revenues as well as the EBITDA. Revenues for FY23 coming in over 3,370 crore. The company managed to do an EBITDA of 1,800 crore on that, and profitability of around 750 crore. Now, when you're talking about the company versus its larger listed peer, the Adani Ports, the total capacity that the company handled last year was close to 93 million metric tons, while Adani Ports managed to handle around 340 million metric tons. In terms of the capacity, it's almost 25% of the larger listed peer. Total capacity in million tons per annum for JSW Infra at 158 million tons per annum versus over 600 million tons per annum for Adani Ports. Now, the upper end of the price band, the stock was substantially undervalued compared to Adani Ports, but after the pop that you've seen today, the stock is largely in line valued with Adani Ports.
Oh, absolutely. 20% on listing, and then it's only moved higher since then as well. So around 32% higher right now on JSW Infra. Vivek, thanks a lot for getting us all of those details. But let's also listen into what the management, Arun Maheshwari, is joined MD and CEO of JSW Infra, who spoke to us about the company's growth strategy from here on. So listen into what he had to tell us.
The debt on the book post this IPO is zero. Net debt is zero. In fact, 5 years back, our total volume on the third-party business was only 6%, and today it has grown to 37%, wherein the volume has grown 3 times. Going forward, making 60-40 ratio or 50-50 ratio in favor of the group looks most likely in the coming years. The capacity what we are going to, or the volume what we are likely to handle, FY23 first quarter, June 23, FY24 first quarter, we have handled 25.42 million ton. I believe that gives a very good, fairly comparison, what we are likely to achieve. We would like to maintain the growth momentum. In the last 20 years, we have grown at 22% CAGR on the volume front, and our ambition would be to maintain that.
All right, that's JSW Infra, and on the listing day, the stock is on fire today. On that note, we'll slip into a short breather on Business Lunch, but when we come back, we'll get you the latest on the corporate India's credit rating revisions in the first half of FY24. Stay tuned.
Welcome back. You're still tuned into Business Lunch. Now, rating companies CRISIL and ICRA have announced the final tally of how many companies were upgraded and how many downgraded in the half year, which ended on September 30th. Both of these agencies point out that while the number of upgrades were twice the number of downgrades, the lead which upgrades enjoyed over downgrades is narrowing. So that seems to be moderating a bit. Lata joins us with more on this. Lata.
Yes, that's a neat wrap. Let me put some numbers to it. CRISIL says number of upgrades were 1.9x the number of downgrades for the 6 months that just ended. This was 5.5x in April-September 2022. That is just 1 year ago. For the half year that just ended, upgrades were 443, downgrades were 232. Now, what is the pace at which they are growing? Upgrades are growing at 12%, but they grew by 13.5% in the half year from October to March. The sectors that have been seeing an upgrade are infra, basically roads and power, many of the services, basically they mean hospitality, hotels, cement, real estate, all those are doing well, and autos. The power and roads are getting upgraded primarily because government is spending a lot, and we have figured out some risk mitigation concepts like InvITs. So all that is helping them. Downgrades have risen by 6.65%, but they rose by only 6.14% in just the previous half year, that's October to March. Downgrades are mostly in export-oriented sectors, so the problem is really the troubled world, not so much within. ICRA is more or less in sync. Their rating upgrades are 2x the number of rating downgrades. Last year and the year before, it was 3x upgrades were as a percentage of downgrades. Credit quality is improving, therefore, but it is improving at a moderating pace. So the lead is declining. Again, upgrading sectors are the same as what CRISIL points out. Hospitality, everyone likes it. Autos are doing better. And realty. These are three very big sectors, and then the infrastructures, power and roads. Downgrades, again, for ICRA, one category they refer to is telecom towers, entirely a domestic story. And the other two are again global, chemicals, polished diamonds, those all victims of global slowdown.
All right. Thanks, Lata. Very informative there. Now, moving on, the World Bank, in its India development update, has said that it expects India's growth to moderate to 6.3% in FY24 from over 7% in FY23, but will continue to be one of the world's fastest growing economies. Parikshit Luthra, our colleague, is right here with all the details of this report. Parikshit, tell us.
Well, the World Bank in its latest India development update has said that, yes, growth will moderate to 6.3% in this fiscal compared to 7.2% in FY23. And this is largely due to a very high base effect last year, which we will see waning. Slowing down of global growth, slowdown in China will be a major factor. Domestic price pressures as well. When it comes to inflation, the bank noted that headline inflation is expected to average around 5.9% in FY24. And this is on account of elevated food prices and oil prices as well. Fiscal deficit is expected to decline to 8.7% in FY24 from 9% of GDP in FY23. When it came to fiscal consolidation, the World Bank country director said that they do not expect the government to deviate from their path of fiscal consolidation due to election spending, and they're not accounting for any slippages in their outlook. However, the report does point out that fiscal consolidation could be delayed by subsidy programs which are being launched by the government to limit the impact of high food prices ahead of general elections in 2024. The bank also believes that there is a need for greater public-private partnerships and crowding in investments to encourage the private sector to invest more, and greater investments from private sector will be a key for the future. So they are really recommending a higher scale and more active consideration of public-private partnerships to attract more capital spending in the future.
All right, Pariksha, thanks a lot for getting us all of those details on what the World Bank has to say on India. In fact, let's also listen to what the country director India of the World Bank has to say as he lists out the drivers for India's growth from here on. Listen in.
India will still remain one of the fastest growing major economies in fiscal year 23-24. What is driving growth in fiscal year 23-24? First, very strong public investment, helping power growth forward. This, of course, going forward will need to be complemented by an equally dynamic private sector investment. The second thing that is driving growth in fiscal 23-24 is strong services growth, both in terms of domestic consumption as well as export of services.
All right, that is the word from the World Bank on India's growth from here on. But with that, it is time for a short break. There's lots more news and updates coming up for you in just a bit, so stay with us.
Welcome back. You're watching Business Lunch. In the last few minutes of trade, actually market has arrested the fall. In fact, slight bit of recovery has been seen in the market. In fact, the ones which are gaining in trade at the moment amongst the heavyweights are Bajaj Auto, and from the banking, Bajaj Finance, and from the auto space, there is Hero Motocorp amongst the beaten down auto space has seen some bit of buying. Grasim, L&T, Coal India with the coal update coming in from the government has also seen some bit of buying. So keep an eye out on the market. The mid-cap universe is where there is more action as well as positive momentum as we see. On to some political updates coming in today and early this morning. Homes of several journalists as well as commentators in New Delhi were raided by the Delhi police, who are investigating terror-related links. In fact, my colleague Abhimanyu is right here with all the details on this development. Abhimanyu.
Well, the raids are currently underway at the NewsClick premises, but no arrests have been confirmed so far. Earlier, Network 18 had reported that the Enforcement Directorate had also registered a case and was probing the possibility of receipt of foreign funding with this portal. As of now, the case being investigated by the Delhi Police pertains to the Unlawful Activities Prevention Act, UAPA, which is being investigated by multiple teams of the Special Cell of the Delhi Police. Several journalists and many other people are being questioned as part of the probe which is underway. As many as 30 places in the National Capital Region are being raided as we speak, and evidence is being gathered, not just documentary evidence, but also electronic evidence in the form of laptops and mobiles. It remains to be seen what further course of action will be initiated by the investigation authorities, even as several accused till now have claimed vendetta on the part of the investigation agencies. The government earlier had said that that if at all there is any wrongdoing, the investigation agencies and the law is going to take its own course. So clearly, any further course of action will remain incumbent on the fact that the evidence which is going to come to light, based on which any further action will be initiated, be it by the Delhi Police or the Enforcement Directorate.
All right. Thanks a lot for getting us all of the details on this important story. We'll, of course, keep bringing you updates on this as and when we do get them. But moving on now to some somber news. A total of 24 patients, including 12 infants, died at a government hospital in Maharashtra in a time span of just 24 hours over the weekend. 10 patients, including 2 infants, were also reported dead in a hospital in Sambhaji Nagar in 24 hours. And a 3-member committee now has been formed to investigate the matter and is expected to submit a detailed report today. Maharashtra's Chief Minister Eknath Shinde has also assured that the probe is underway and that appropriate action will be taken.
All right. With that, it's curtains down on this edition of Business Lunch, but lots of news developments on the other side in Mid-Cap Radar. Stay tuned to CNBC-TV18.